Hello everyone, hello YouTube, and I hope that you are all well. I know it's been I think it's been about 5, 6 months since I last posted. And I do apologise for that. It's just been such a busy start of the year with my wedding and my honeymoon, and now that's out of the way, I've got a bit more time. But I was putting all my focus in the Discord and the mentorship and making sure that there's weekly content there. But to be honest, I also ran out of content to post on YouTube because I don't know what more I can post. Um, so I thought what I'll do is I'll just jump on and see what trades you could have taken over the last week. So yeah, let's do last week for example, using the concepts that I've taught you for free on our channel, right? So I thought that'd be a good idea. But I do apologize for the lack of posting, but I do hope the content in the Telegram channel has been useful in the meantime, because that's a little bit easier to maintain as opposed to sitting down and creating content on YouTube, to be honest. But anyway, as usual, I just want to say thank you for the support. Even when we haven't been active, our subscribers have jumped massively. It's crazy, and obviously thank you for sharing the videos and liking and commenting as well. So let's get into it. So the first thing that we will do, so I'm going to look at EU, and what we're going to do, we're going to focus on trading London session. That's all I trade at the minute. I only trade between 7 and 9, but we're going to cover the whole London session because we're not going to use a seconds time frame in this video because I don't want to confuse you guys. I want to stick to using 1 minute for entries and not potentially, and ideally focusing on swing positions. Now, although I only trade EU, well, sometimes GU, but I mainly trade EU, so I already know the outcome, and as in I already know what price has already done, but I don't know if there's an entry, and I haven't actually examined price action candle by candle using the concepts that I've taught on YouTube, for example. I've only been trading it using my own trading model, which I teach obviously in the mentorship. But it's not far different. The foundations are exactly the same. We just use it in a bit more refined way in terms of utilizing the lower time frames. Now, the main reason why I wanna do this video is because I think there's a lot of emphasis on trading the minute time frame, for example, or the lower time frames. However, sometimes what happens is that you'll take a string of losses because all you're doing is focusing on the minute time frame. Let's just focus on the minute time frame for now. Say that you're putting all your time and effort into following the minute time frame ranges and so on, following order flow, whatever you're trying to do, and then you realize that you're not finding any form of consistency because your direction isn't correct. You do understand that your higher time frame is what is going to push that direction, right? So still need to trade in the direction that the higher time frame is telling us. Now, I know I said direction many times just then, but what I'm trying to say is you can't just jump onto the 1 minute time frame and assume that you can read price and trade it in any range that happens on the session, right? We still need to have some sort of logic. Now, obviously, to the point where how I'm trading now, I only focus on the 15 second to the 1 minute, but the idea is exactly the same. So essentially what I'm going to teach on this video is what I do on the lower time frames. But as I said, I'm not going to start going through the seconds time frame without having any context to it, because it's just going to confuse you guys. But you can do your own testing and see the same thing happening in the lower time frame, and I'll explain the pros and cons of each way of doing it. So the first thing that we'll do coming into the week, so let's go on to, so what was last Monday? 29th. Okay, so let's go from market open, which is 28th, but we'll go to 29th anyway. Okay, so we're here. So let me just check the for. Okay, so we're here. So this is last Monday, and this is what we will see on market open. What we can read from price at this point is that previously what we've done is we've taken out a low, and we've just taken out this previous low. So effectively we're going bearish, as simple as that. Now you need to remember with our videos and the way that we teach and the way that we trade is as simple as possible. There's no like magic, or there's no waffle to it. We just have to read things as they are. There's no assumptions and there's no predictions either. But what we can see here is that clearly we are in a bearish move. Now the only thing that we can say here is that this break of structure here is formed from this POI at the range high. Now personally, we only stick to the extremes ourselves. I know sometimes people can mark this as POIs and so on, but we don't tend to do that purely because we haven't found much consistency from doing that. We're better off being patient and waiting for price to reach our extreme points. So in terms of the daily time frame, we only have this POI going forward. So our plan, essentially, before I go forward, our plan is to mark our higher time frame POIs. We're going to examine price when it comes to, I don't know why I did that box. We're going to examine price once it comes to our London session, and we're going to trade off the minute time frame, but following the direction of our higher time frame. But we need to follow the reactions and order flow. This is what will give us the most confluence going forward. So all we can say on the daily time frame is, if we are going to take a trade following the daily time frame, we need to wait for a POI. We need to wait for this POI to be tapped before we can look for any sort of reaction. But obviously, ideally, you want to go and refine this further. So what we can do is go to the 4 hour. Potentially, we can refine it to. So we have our breaker structure. Now, in this case, this isn't overly clear, to be honest. I mean, you can refine it to this candle here, potentially. But the only problem with this one, when you have something like this, your range high is all the way here. I mean, well, your daily range high is all the way here, right? So I don't really like doing that, to be honest. But we go to the hourly and have a look while I'm here. Yeah, even that doesn't make things any different. So if this is the case, all you can do is, it depends on if it's clear to you, right? So what we can do is we can mark our 50% and then just do it this way. In terms of our refinement in this case, because we're not going to trade directly off this, we don't need to be too refined, but we don't want our POIs to be too large, because effectively we can have reactions at, for example, at the open, which somewhat follow through, and then we take the trade, for example, here, and then we get taken out and price goes further into the POI. And because you've either taken a loss or break even, it could demotivate you to bother to stop looking, and then you're going to miss opportunities that play out. Ideally, you want to refine it to what you feel comfortable about. For me, about 10-15 pips when it comes to the entry time frame is ideal in terms of your POI selection, but it's completely what your preference is, really. So let me get rid of all of this before I carry on drawing. There we go. So that's all I can see on the daily time frame, and this is what you'll do coming into start of the week. Well, this is what I do anyway. Just having a look at what the higher time frame direction is. But the thing is, also, for price to come to this POI, we need to wait for some sort of pullback, obviously, right? But this low here has not been confirmed, so we can't say that this is the low that's going to cause this push up. So we aren't going to really look for longs until we have the confirmation of the low being formed. However, because this is obviously a valid POI, I need to stop doing that. I keep drawing, but although this is a valid POI up here, right, it doesn't mean that we're just going to wait for that. We can still carry on following the ranges on the lower time frames going forward here, according to our intraday time frames. We just need to be aware that should price go bullish, we know and have a reason as to where price should go. Right, so let's go to the 4 hour. So from the 4 hour, and this is what we'll see on market open. So judging from price, all we can see is that we are in this range from here, from that high to this low, and currently there's a reaction from, when was that? 26. So the reaction from the 26th from this 4 hour POI. Now what we can say here is that price needs to go out and take out this low. That's the only logical thing that we can say from this reaction. So what I'm going to do is mark out this POI here. Now, just because we have missed that initial reaction on the 26th doesn't mean that we've missed the move, okay? It just means that we are just following the reaction, because we can wait for days for this POI to be tapped. However, if we can see something on the intraday time frame, as long as we're sticking to our ranges, we can follow whatever range forms, right? So In this case, we have this range high to this range low. So our ideal target point is going to be to take out this 4-hour low. So that's our high time frame analysis done. Now it's trying to look for our intraday moves and our intraday entries. So judging from this reaction, all we need to do is go to these are my general time frames. I don't go to odd time frames like the 10 minute, 12 minute, whatever. I don't really tend to do that, to be honest, but you can do that should you wish, for your refinements, but yeah, I don't need to. Okay, so this is still okay. We haven't got the 29th yet. Let me just play that out. Okay, so now coming into this, the only way that this whole move will be invalidated if we are going to take out this 4-hour low here. All that's going to do is create a new POI. I know that's a massive POI, to be fair, but if price was to come and break out this low, we can then look to trade and mark this new POI, and that is following bearish order flow at that point. Okay, but at this point order flow isn't confirmed. Okay, the only thing that we can say that order flow is being created is now it's been confirmed, but now we have this hourly break from that mitigation play, because all we can see previously is that we got a breaker structure and mitigation. Obviously this is taking a liquidity grab before breaking down. This has caused a reaction which has now gone on to break this structure. So now we have bearish order flow going forward now. So in terms of our direction has always been bearish, and this is all giving us that bearish scenario. So we are focusing on going short. So in this case, as I said, our higher time frame analysis should be done. You can either do that obviously on Sunday or Monday. It's completely up to you how you wish to do that. Now that we've done that, we need to mark out our POIs. Now, in terms of the hourly time frame POI, all we have is this. Now, this is a huge POI. Okay. Now, in terms of refinement, there's a few ways you can do this. I think the quickest way and the most efficient way, for me personally, is by using time frame you're on, by either using the 50% or looking for any liquidity wicks, right? So in this case, what we have is this wick has taken previous liquidity. So what we can say, and especially I can't remember what video I explained this on, but when you have wicks like this, right? In this, I don't know why I drew another candle, but in terms of what's happening in this price is that the buyers are getting exhausted, right? And this is when the sellers take over. So in this case, in this move, in this bearish push, the first point where sellers were introduced to the market was within this wick here, right? So going forward, what we can do is now refine it to this candle, refine it to this wick, sorry. Let's measure out that POI. So what's that? It's about 27 pips, which is a bit big. So we can mark out 50%, which is about there, and then there we go. So all we need to do is wait for some sort of reaction. Now, as I said, I have watched price. I do know what he's going to do, but I don't know if price is going to reach this POI or not. So we may not even get an entry in this video. But what I'm trying to give you, because I know a lot of you want proof of entries. I don't have any proof of entries for this move because I don't trade this way. Exactly, the rules are exactly the same, but I don't trade this way, for example. So I haven't taken this trade. However, this will give you a live reaction of price and my interpretation. I'm trying to give you everything that I'm thinking about at this current point. So how I got to this point is, I hope it was clear enough. And this is something you only need to do that higher time frame analysis at the start of the week. The rest of it you just need to wait. And this is a far more that's not correct English. This is a more relaxed way of trading when you're waiting for these POIs to be tapped. And I think the problem is with a lot of you can be that waiting game, because it does take a while for price to reach there. However, the only thing that I want to focus on is trading within a session. Now, I prefer trading London session, and the London session for me, because what you can do is ideally trade the session that you are able to trade, so you can still follow the 1 minute time frame should you wish. And I know that a lot of you want to do that, because you want to try and catch the most amount of trades, but you shouldn't be taking trades that don't make sense. You still need to trade some sort of reaction to make sense. Now, going forward, what we need to do is wait for. So our plan is wait for price to tap into this POI, and then we're going to trade the 1 minute time frame reaction on a particular session. Okay, whenever that happens. So we've got from the 29th to the 2nd to find this trade. So this would show us a trade that we potentially could have taken last week, if there is anything, right? And if we were to get into a trade, our minimum target should be to take out this low. And in terms of minimum target, that is following the higher time frame direction. However, I will, if there is an entry, I will show you where we could have potentially taken partials. So we need to wait for price to tap in. So I might as well just play it out, to be fair. Okay. Okay. Before I go on. So now what we have, this is what I mean in terms of waiting for a refinement, is that we could have wasted time trading this reaction, trading this reaction, trading this reaction, and have no form of follow through, right? So all we potentially have just eliminated 3 or 4 potential losses, right, that we could have taken in. Well, there was no trade in this session, potentially a trade in this session, potentially trade in this session, right, to go bearish, because this reaction still makes sense. But we potentially have avoided either we've potentially avoided some losses, or potentially avoided wasting our energy on break-even trades. Okay, although you probably could have taken a partial, whatever, I don't know. However, we're going to stick to our refinement level and try to catch the trade at the highest point as possible, because we want to try and capitalize on the biggest move without using too much without exerting too much energy, right? So now that we have this reaction, we want to wait for our London session to come out. However, what we can do is start preparing for it. So generally before a session, especially, well, what I do is I sit about 15 minutes before, just preparing and monitor what previous price has done. So we've just missed this London session, price hasn't tapped in, so we need to wait for this London session to come. Let me just play it out towards it. Okay, now once price is tapped, right, so I should have done it a little bit before. No, that's not what I want to do. So let's go to here, for example. Okay, so once prices come, okay, so that ideally you want to look from, so we're playing an hourly reaction, so we are not going to look for the hourly time frame for our next POI to trade off, because going into the session, although we want to trade off the minute time frame, we want to have some sort of reference point to trade the reaction off. Now, coming from the 15-minute time frame, all we have is massive range from this high all the way to this low here. So for us to trade off the 15-minute, we need to wait for this low to be taken out before we look for a POI to continue to take that bearish play. The next best play you can do is wait for the look at the 5-minute and see what that's showing. And again, this is something that you'll do just before the session starts, so you're prepared, and then you have those reference points in place. Okay, so in this case, what we have is our 5-minute. Oh, what have I done there? Okay, in this case, what we have is our 5-minute high, our 5-minute low. Sorry, this is our 5-minute high. 5-minute high, 5-minute low, and we have a breaker structure. This breaker structure has come from this high here. So now what we have is this reaction play, and this mitigation is completed once this structure has been taken out. So what that means is now that we have a 5-minute order flow because of that successful mitigation. Now in terms of this breaker structure here, and I notice I've not actually been drawing any lines for you guys, I'm sorry. And then when I do draw a line, it messes up. Anyway, this breaker structure, where has it come from? So our range high in this case is, I don't know if I'm zooming in enough, there we go. Sorry. So our range high in this case is this candle here. Now in terms of our reaction point, in terms of our reference and our POI, so price is efficient up until this candle here. So what we can do is mark out this candle all the way to the range high, and let's just check how big is that? How big that is? 3.6 is more than enough. That is fine. and then that goes on to create this range low, which then breaks structure, and then we create a new range low all the way. Did that break? No. To here. Okay. So now what we have is two POIs. I drew that one wrong. Sorry. We got two POIs now, and all we need to wait for is our London session to trade. Should it react? But obviously, because I accidentally went a little bit forward, I sort of seen that it completely blows through this one. And then we can go to our minute time frame now, because this is our entry time frame that we're going to be using. And essentially, our plan is to wait for a reaction here. We need to wait for a bearish reaction going forward, or a bearish reaction here. Either one of these two is going to be fine, but we're not going to look to go long. Alright, so let me zoom in and try to stop making random marks. Anyway, so let's wait for London to come into play, which is at 8. When it comes, okay. So now we are coming into the session, and we do have this reaction. So all we need to wait for is some sort of bearish break before looking to trade. And I think, looking at this, okay, what I can say is, for example, and this, I think some of you can relate to this, but some of you would try to trade the minute time frame. Now, if you were to follow the minute time frame structure, for example, in this scenario here, all I can say is that what we can see is we've got a break of structure, and we've got this mitigation. This is order flow being created. We've got a point of invalidation, and now we can look for the next POI to take a trade. Now, in terms of our reaction here, what we can do potentially is, I don't know, this is all efficient until we get to this point. So we can say that this candle is the next refinement. That makes sense. So effectively, what you can do is potentially trade from here to take out whenever that high has been created. So I mean, that's not as refined as it could be, but I'm just trying to prove a point that we can trade from this POI, for example, and take it to the high. And I think a lot of you get stuck in this sort of way of trading, because it does make sense in a way, but there's no backing that it has any higher time frame potential, any higher time frame swing, unless you're looking to trade this way. So let's just play price and see what happens. So we've got some sort of reaction, and we've gone to the minimum target point. However, I would not suggest trading this way, because it doesn't really make sense, and the higher time frame doesn't even support it. We don't have enough confluence on the 1 minute time frame alone to take this trade, and this is just taking a high risk move. Now that obviously we're taking out structure again, we also got another reaction point, break structure, another reaction point, which price is then obviously violated. And then I think this is what, oh gosh, I'm gone too far, sorry. Okay, actually I'll talk about price over here anyway. I was getting distracted by this. So what we can say is, well, this is what some of us can get caught up in, is obviously this reaction play, and you're thinking you're doing everything right. But the thing is, you'll eventually go for this reaction, you'll take a loss, and you think, oh, okay, this is not working for me, and you'll give up. But you need to understand that you're trading very low probability, because you're trading firstly against the trend, against the daily, 4-hour, hourly, trading all against that, and you're ignoring the fact that you're in a 1 hour reaction, a bearish reaction, right? So something that we need to talk about, and I just saw it now, is the fact that we've just got this bearish break here. So I wanted to give you a better reaction. So in terms of what we can do now, is now that we have this bearish play, we have this 1 minute POI here. Now effectively we can refine this candle to this one, and what we can do, how big is this actually, because you can either take the trade straight off that one, because this one would make sense in terms of, I didn't do that correctly, sorry. This one would make sense in terms of, because we have this point, we have a mitigation play from the left, and we've just gone on to break structure, so we've got somewhat of a form of invalidation, and this reaction makes sense. Now we do have obviously liquidity build up going on here, and momentum's in our favor, right? So we can take the trade off here, but I think that is too big of a POI, and now that I'm saying that, I bet price is going to react up here, but I am going to stick to what I would do, is refine this further. So potentially you can use, actually I'm not going to use second time frame because I said I wouldn't. I guess you can use it for refinement. Nah, I'll stick to the minute time frame. So what we can do is mark out the 50% and then place a limit order on this one. Let's just place it here. And we can do a 3 pip on this one. And if you were to do it from the open, so you already be in the trade and you'll have a 5.4 pip stop. If you're like me, I'll round it up to round numbers, to be fair, it's just easier. But anyway, this is what I personally would do in terms of if I was trading using this model. This is how I used to trade, by the way, before I've done any form of refinement to what I'm doing today. This is how I used to trade, and it was very successful. The only difference why I trade the way I do now is because I trade the lower time frames, and it allows me to catch a trade within the first 2 hours of my session. Well, I only trade between 7 and 9, so it's obviously pre-London and London Open, and that's all I need. So that's a level of refinement. So I've gone from obviously trading this way to what I'm doing now. So what I'm trying to give you is an idea of how I got to where I am using SMC, for example. Obviously, I was trading way before that using a set and forget method. But in terms of this is obviously my first way of trading SMC, but with a rule set. And I'll do a recap at the end of this. Anyway, I know I'm starting to waffle a bit. So essentially, we just need to wait for some sort of reaction. Should it react? Okay, so now that we're into this trade, in terms of break even, I tend to go break even after 2 break structures myself. So we've just broken structure now. So now that we've broken, we had to break this structure low. That was minor structure I was talking about. Okay, so now that we've broken this structure, I'm not going to move to break even just yet. However, this is one entry point here. Now that we've broken this structure, what we can do is place another entry. I don't take 2 entries, but if you miss this one, this next one would hold higher probability. Is taking a trade straight off this OB here, and I don't know how big this one is. I mean, that's large. Let's go 50% of this one. The reason why I'm using this one and not this one, that's the refinement. The range high is all the way here. So in any way, you're gonna refine to, you're gonna end up covering the range high with your stop loss anyway. So in terms of my 50%, we could put this here, and then I think we could do a 3 pip on this one. You can't do 2, can you? No, you can't squeeze 2. So we do 3 pips on this one. Get rid of this. So this one would be the safer entry and the higher probability one going forward. So I'm not sure, depending on your broker and slippage, if you'll be taken out on this one. I can't comment. I don't really know. From experience, sometimes I do. On EU, not really. If it was GU, then yeah, I would definitely be taken out. Anyway, now that I've broken this structure, okay, so I would have taken this entry anyway. So now that I've broken this structure, now we can move this to break even, and now we're sitting risk free. Now we need to remember what we are trying to do. So our higher time frame target is to go out to take out this 4-hour low. So we can move this to, let's have a round number on that one and that one there. Okay, so those are our target points. Now I already know obviously price does take out this low, but obviously I didn't know if there was an entry, which obviously there is. It's whether this holds or not. Now we can't bank that price is going to reach that POI. So not that POI, that to take out that low. We can't bank that this is the move that is going to do that. However, what we can do is bank up on this move. For example, where price is now, we can hit. Do we hit a 1 to 10? I assume we do. Yeah. So for example, my move is to take partials at because my moves are pretty quick. To be fair, I tend to take a partial at 10 pips because that's a guaranteed move. But 10 pips either gives me 20R or 10R, depending on my size of the stop loss. EU can allow you to have 0.5 stop. It does come with a bit of higher risk, and I haven't got slipped in a long time, to be fair, but you do obviously have that risk. But a one pip stop is very safe because the entries are on the second time frame as opposed to the minute, which is why I was seeing a little bit different. Now, in terms of your partial points, you need to remember to pay yourself, but let's try and think about our logical targets. For example, we're trading that 5 minute reaction, right? So we're trading this 5 minute, which has gone on in selective with this one, has gone on to create this low. So we can take this as a valid partial point because these POIs have failed to hold. This one's reacting. This is following bearish order flow. So with logically, it makes sense for price to go out to take out this low. So you can have that as a partial point, and that would be that would give you a 1 to 12. So you could take a partial of, if you take half that, you're taking 6. You're taking 6R there, right? In the space of, and this is all in one session, by the way. So you've just taken a partial in the space of an hour, right? That's 1 to 6 in an hour. And then the rest of anything else that happens after that is just a bonus. And that's the way I see it, is that because these partials and compounding this is probably the best way to grow your account. It's not about hitting the high risk rewards that you constantly see on social media. It's all about understanding and appreciating the fact that you can hit 1 to 3 plus within a few minutes very, very easily, as long as you can as long as you keep composed and as long as you stick to the rule set. Because all we've done is stuck to the same rule set in terms of following order flow, stuck to our structure rules, stuck to our OB rules. We can trade with high probability. But the thing is, if you think about it, we started the week from the 29th, right? This trade was taken and went on the 1st. So we've gone no trade on the 29th, no trade on the 30th. We had to wait 3 days to take our first trade on that week. Now the question is, can some of you guys hold yourself to stay away from the charts and stick to your rules and stick to the plan for those 3 days? Because now that we've taken the trade, we don't need to trade for the rest of the week, for example. Because once we've taken partial, that's it. As I said, the rest of it is a bonus. And again, what I'm trying to explain to you is obviously my thought process in terms of how I would take the trade, for example, following the swing model. So in this case, I wouldn't look to trade for the rest of the week until this gets taken out. If this gets taken out, then obviously I'll look for another entry, but I don't need to trade anymore for the rest of the week. So let's see what happens until the end of the week, should it reach any point of target. Another ideal target point which I just thought about was the hourly low, which is from this range here. So you can have that as another partial point, which conveniently prices at now. And then obviously whatever happens next is, again, you can either take out, I would set a hard target at this 4-hour low. The reason why I would do that is because in terms of our daily perspective, we have our daily POI here. So somewhat we're expecting some sort of retracement back to this daily POI. So I can't say that this is going to be a confirmed continuation of a low. I'll rather bank up and secure capital on this move as opposed to hoping for a massive swing, because there's no need for a massive swing. But at this point, you've taken one partial here, another partial here. There's no point holding a further swing unless obviously you want to. Sometimes obviously on a bigger size account, holding a small percentage swing, to be fair, money wise it's a lot, but on a small account there's no point. Just focus on building your account with these trades once or twice a week, whatever presents, right? Anyway, let's continue until the end of the week. So we've just hit the second now. So this is obviously Friday. Where does it finish? Sorry, we finished about here. I think this entry would have been taken out. Yeah, so you would have been taken out at break even. Well, I hope you would have taken out break even, depending on your management on that. But even though that's break even, I would have hoped that you've banked something on that move. So now this trade can be taken out. Now it's up to you if you're going to hold this over the weekend or not. To be honest, if you're taking partials at this point, there's no harm in holding the trade. Just make sure your broker offers you some sort of guaranteed stop or some sort of guarantee against the slippage. I know IC doesn't. even my other broker, IG, it doesn't give you a guaranteed stop. You just get charged your stop loss and a half, depending on your stop is. So if it's at break even, you get charged your stop loss basically. Anyway, we can still hold that trade. We can see. I know it, to be fair. I know it's going to take out this 4 hour low because I've already seen it. Yeah. So this is taking out the 4 hour low, and you're already out of this trade. So that was obviously a 1 to 49 arm move. Within that, you're obviously taking partials, but that's your swing of last week. So the swings, I think, because I've had questions and comments about, when are the swings going to start playing out again. The swings have always been there. It's just the fact that this has taken a long process for price to play out. If you think about it, it's taken 3 days to take the entry, and then the whole from entry to TP. I mean, eventually it took 3 days, which, to be fair, for a swing, that's great, because this is a swing in terms of a high time frame move. We just caught it with a very tight stop loss and a very good entry basically. But think about the confluence. Let's think about what we've done as a summary, because I know I can waffle and I can talk for ages, to be fair. So, but I hope that this was useful. Now, in terms of the 4 hour direction, okay. So we aren't trading that daily POI. We're trading this 4 hour reaction from this POI here, okay. From there, we got to the hourly. So on the Sunday or Monday, you've done that directional move planning. You don't need to go back to that anymore. All you need to do is work out where the reactions are taking place. So conveniently, we've had this hourly reaction, and then we've just waited for our POI to be tapped. That took 3 days for it to be tapped, and then we are going to wait for the following reaction. So all we're doing is following mitigation after mitigation after mitigation, and that is what following order flow is, and that's how we can trade using the highest probability possible. And then following that, what we did is we examined the 15-minute time frame in terms of the reaction, but the range was a bit too big. And to be fair, given this range now, it makes sense where price have reacted in terms of we've gone to take out this low, and in terms of the reaction point, it somewhat makes sense, but I guess it's taken out a liquidity here. But somewhat makes sense where price has reacted from and then continued further down. Let me get rid of my drawings before I make it a mess. There we go. Now, once we've done that, because that 15-minute range was too big, we went to the 5-minute. So again, this is sticking to the rules and sticking to some sort of discipline. So what we have here is we have a range high, range low, breaker structure, mitigation, invalidation point, bearish order flow, and we just traded off the valid OB, which is the closest to the point of invalidation and closest to the mitigation point, and we've taken the trade off the minute time frame in the London session. So again, this trade was controlled in terms of what time we've taken it, because it's all in our control. Because say for example this happened outside of London, we just missed a move, which is fine, but we're sticking to our rules in terms of, and this is how you can maintain that discipline. We stuck to our rules in terms of trading London session. Okay, we've got our entry. We have also taken another entry somewhere here, which was eventually taken out at break even, but hopefully taking some partials. And although it's taken the 1 minute time frame, we've had that high time frame direction the whole time, and the high time frame target point, which obviously gave us a 147 pip move for a 49R trade. Obviously with partials along the way. Now I didn't take this trade, but this is a good representation of what you could have done in the previous week. What I want to do is, hopefully, I can't commit to say that I'm going to do this weekly, but what I want to do is hopefully do this every few weeks, just to go through what price action has done over the previous week and give you an idea of what you could have done. And hopefully over time, by seeing this over and over again, you'll understand that everything that we do is a repeated pattern. That's the whole point of having a rule set. And obviously the difference between what you're learning here and what you're learning in the mentorship is the fact that you'll learn the exact rules in terms of our time frames, our bias direction, same thing. In terms of mainly our entries, you'll learn the exact entry model and be able to do this on a more smaller level, which allows us to trade basically every single day using the exact same model, and it gives us a higher chance of actually catching an entry on a daily basis. But we can't guarantee obviously an entry on every single day, but using this is far more relaxed, I would say. And to be fair, this will provide you a higher win rate going forward, purely because there's less exposure. So that is the pros and cons given the two models. But anyway, I hope you all found this breakdown useful, and I hope it's giving you a better insight. And you could tie this with the blueprint video and the previous videos to that, and now hopefully this will give you a better idea of how to approach the market on a weekly basis from Sunday through to Friday. And then the rest of it is risk management. How you manage your trade is completely down to you, and is your preference. But anyway, I hope you liked the video, and I'll see you all in the next one.